Hey, what's going on, guys? Austin the Money here. What a day. Honestly, what a week. Like, this week has been insane. Um, Absolutely insane. I'm going to go over the recap tomorrow with you guys on how this week went. But long story short, let me go ahead and get into. I put in trades for next week, right? I had some SoFi puts that were down to $1. So I closed out all those contracts this morning. And check out what I did. Oh, that's not it. So, right at the top, literally 105.42. It was like 105.42 over here, but the line won't show it. Anyways, I bought 1,400 shares at 105.42 this morning, right like the first 5 minutes of market open. And then I tried to sell my in the money calls, and the stock was falling really quick. I was like, oh shit, this is not good. So I put on a limit order, and luckily it got a quick bounce back up, and I got filled. And then my position just started going underwater faster than, dude, it was insane. The shit went down to $96, and I bought in at 105. So you're talking, I'm already down, what, almost 9%? Just for reference, this might look like a little dip, but this dip was $8,100 this morning. I was like, holy shit. But I was like, you know what? It's Hood. I believe in the stock, and I knew it was probably going to be included in the S&P 500 soon, either this month or next month. I didn't actually know what day that was. I had no idea it was today. But I was like, if it misses in September, it'll probably get it in October. And then that's like a free 5% day. Usually when stocks get included in the S&P 500, it's like a 5% move on the stock. So I was like, whatever. I'll just have to back hold this, and I'll make a video. I was like right around here. I was like, you know what? I'll just make a video on what to do if your trade goes completely south, because that's exactly how this one was looking. Absolutely getting hammered today. And went to the gym. I went to the gym probably right around here. And then all of a sudden I get the notification. Hood is up 5% in the after hours. I was like, what? I was like, no way. My trade went from freaking terrible to amazing in the blink of an eye. I was like, wow. Like, holy shit, this is amazing. So honestly, I got super lucky. I got bailed out by the S&P 500 inclusion. And so luckily, my in the money calls at 98, they were out of the money at one point. I had collected so much premium from these. Like, they're up $3,500. And at one point, these things were what? Another $1.50 cheaper. So $1.50 times 14 contracts. I think these things were like up $5,000 or $6,000 at one point. I was like, oh shoot. But that's why I do in the money. I do it specifically in the money for scenarios like this that could possibly happen, right? Because if I did not have in the money cover calls on, that 8,000 down would have been 12,000 down or 13,000 down, because I would have been down the extra whatever this is up, 3,500. So at the worst point of the day, these are worth $3.08. Now they're worth $5.70. So that's an extra $1.62 times 14 contracts. So 162 times 14. That's how much more I would have been down if I did not have my in the money cover calls. If I had out of the money, that would have protected me very minimally compared to what in the money did. So luckily for me, even though it did drop down to 96, I sold 95 puts for next week. Dude, look, I sold these things for 85 a contract. Look at that. Literally, I got the lowest amount. Dude, if I would have sold those like up here, oh my god, I'd be freaking, whew, I'd be making a ton of money. But anyways, Hood is at 107 now, up 6% in the after hours going into the weekend. My cash cure puts honestly, they're worth almost $1,300. They're probably going to be worth, if I had to take a guess, I'd probably say like $30 or 30 cents a contract by Monday morning. If we open up at the same price that we're at right now, probably say like around 30, maybe 20, 30. But I will probably be looking to close these out, since I will have probably gained over 60% of my premium that I initially was going for, and looking to get into a new trade. 60% on a Monday morning when the week has just started. That's great. That's exactly what I want. But anyways, I was going to the video was supposed to be what to do in scenarios like this, but I mean, now I don't have to worry about it. But if I did, let's just say I'm still under the water and things are going terrible. Okay? What I would do first off is, since let's just pretend we're sitting at the lowest point, $96. All right, this trade is absolutely terrible. My 98 calls went from in the money to now they're out of the money. What I would do is I would just ride it out till next Friday, till September 12th. All right, I would see what Hood does. Maybe Hood jumps back over 98 by next Friday, and my trades go 100% successful. Or maybe Hood continues to sell off. So let's just say Hood continues to sell off. I personally would keep these covered calls on, collect the full premium, which is at the bottom $11,480, and I would roll my puts, right? Because I have $150,000 in Robinhood, and this is a $159,000 account. So I don't want to be an extra 9 contracts at 95. I don't want to be an extra almost $90,000 in margin. So basically, I would just roll these out, right? I would look to do something like this. Maybe we'll try a couple weeks first, see what the premiums will be looking like then. Well, since it shot back up, the premiums are kind of jacked up right now, because I think the closing price was like 101 or something, so the premiums are based off of that. But anyways, I would look to go like 1, 2, 3, 4. It's about 4 weeks out from next. Go about 4 weeks out, and then I would just lower the strike. Maybe like $91. Yeah, I'm only gonna be getting $1,250 for 3 weeks, but I'm protecting myself, right? So I'm lowering my buy-in price to Hood from 95 to 91, which saves me $400 times 9 contracts. And on top of that, I'm buying myself time for Hood to rebound. And also, I'm buying myself the privilege of not going $90,000 into margin, because that's not what I want to do on this play, right? When I buy my shares and sell in the money covered calls and sell cash secure puts on margin, I never, ever, ever want to buy those. I never want those cash secure puts to get assigned. I mean, they could, and I would just be in margin, but I prefer not to do that. So I try not to let my puts get assigned. I would just roll this out and down the best I could, and then I would just start selling out of the money covered calls, and I would just keep riding Hood. Like, I would just go out a couple weeks or whatever, and then I would just start selling like out of the money covered calls. So I would do like the best I could, and just start rolling like that. And then maybe I can get like some share appreciation in there as well. But yeah, basically, don't take ownership of the puts, and then I would just sell out of the money cover calls and hope that Robinhood went back up, and I would just be bag holding Robinhood until it did. Obviously, if Robinhood dropped like 30% or something insane, I probably would want to get assigned on those puts. Buying the stock 30% down would bring my average cost, closer to like 15 to 20% down. And that would be more beneficial. especially if I see Robinhood like trying to bottom or trying to like rebound or recover. I would definitely want to low like dollar cost average down into Robinhood. But that I would need to see it to go way like past 20% down before I would consider dollar cost averaging. Because it's not down more than 20%, you're kind of just bag holding a stock that's, you're down on the position, but you're not down over 20%. Like it's not like a crazy bag holder. And that's why I don't trade some stocks. Honestly, I kind of did get a little bit greedy with Hood today. This morning, I don't know, my puts were at $1. I was like, you know what? I'm going to buy these back and I'm going to go ahead and get into a new position for next week. And Google is my baby. And this was my play. This was my in the money play for this week that just expired. These were a huge success, obviously, because of this massive news that Google got. Basically, they don't have to sell Google Chrome, and they can keep that. And yeah, that's basically what it is. They get to keep Chrome, and they don't have to sell off a portion of their business. But yeah, I got super lucky with the Google news and super lucky with the Hood news. I mean, this was an insane week of. I didn't really get bailed out with the Google because Google was still way, $12 above my strike. I sold the 197s. But yeah, I just thought it was absolutely crazy that the two stocks I trade were also the the biggest news hitters this week, probably, besides Broadcom getting that massive deal with freaking OpenAI, ChatGPT, however you know those people. And then if you guys notice, I do have a small position in a couple healthcare names. These will be long-term shares. I'm looking to build a very long-term portion to this portfolio. I want to take advantage of the long-term capital gains, which I believe is 0% up to like $40,000 of profit or something like that per year. So really trying to take advantage of that. So I will slowly, because this is going to be 90% plus a trading account. But I will be slowly adding shares of stocks that I think are either undervalued or something that I wouldn't mind holding on to for 12 months plus. So as of right now, I just have 3 shares of Eli Lilly that I am slightly down on, which I was slightly up on, and then not anymore. And United Healthcare, or Health Group, whatever you want to call them. So those are just very, very small. I think $900 here and $2,000 here. So less than 2% of the portfolio total. But those are the trades, guys. Freaking insane swing on the day. Portfolio was down to 146 and now it's at 160. Obviously, once my cover call shit gets adjusted on Monday, I will not be at 160,000. I'll probably be I'll probably be like 155, 500, maybe 156 if I'm lucky. But that's all I expect to be up. But and the Roth, if you guys are still here checking in on the Roth, this week we made about $20, up 0.5%. Well, I wish it would show me my trades. I guess I'll let me see. Oh my god, what did they do to this app? I don't even know how to. Where's my search bar? Am I tripping? Oh, maybe, I don't know. So on, oh my god, it doesn't even show me my trades. Bro, this is low-key ass. What is this update? Okay, well, I had a put that just expired on my Roth. I don't know where it is. Dude, where is my put? What is going on? Okay, well, I sold a put. I sold like a 23 put, I think, or something like that, in the Roth for like $15, I think, or something. Dude, what the hell is this? I'm used to it saying like the put expiration like right here in the middle, but it's not. Let's see if open is showing me. No, open says screw you, brother. What is this? Okay, well, I had open puts too, and I guess everything has just evaporated into thin air. I don't know, man. I don't know what is going on with this. Let me go back here and see if I can look at open. Oh my goodness. Where's my notification bar? What the fuck, bro? I don't know, guys. I don't know how to show you the trades. All I know is I had a SoFi put at 23 that expired worthless. I think I collected like $15 from that. So probably a little over half, probably about 0.75% on that trade. And then I sold 3 $4 puts on open for $4. So that was a 1% return on my investment on open. And they all expired worthless. Have no idea of how to pull that up for you guys, but yeah. Don't know. Options. Oh, would you look at that? Holy shitballs. All right, so pending right here. Boom. Sweet. Okay, so I sold the 23 put. Okay, I sold it for $12, not 15. It was $12, so about a little over half a percent return. And open, we sold the $4 for $4. That is exactly a 1% return on the rest of the money. And these are all expiring, so that will be $24 on the portfolio, which is a little under 1%, but you know, that's all right. That's all right. We're going to be moving this Roth up nice and slow, hopefully shooting for close, or if not 1% per week. That is the goal. I am going to be a little bit more risky in the Roth just because I have 30 years until I'm allowed to touch this money. So I can definitely back hold. I got time to back hold if I need to. But obviously I don't want to. I don't want to get in no crazy stocks that I'm going to be back holding for years. But I'm definitely going to contribute to my Roth. First, I'm going to stop contributing to the main port and focus on maxing out my Roth so I can take advantage of, tax-free gains. So I'm going to max this out to 7,000 ASAP, hopefully before the end of the year. I'm going to put 2,000 in it on the 1st of October. Yeah, 1st of October. I'm going to put in 2,000, maybe 3,000, but definitely 2,000. And we'll go from there. Sorry, my app has just updated to this whole thing today. I know everyone else has had this because I see other YouTube videos where people already have this update. I did not have this update till today. So, yeah, that's cool. But, yeah, guys, that's the video. We absolutely bailed out on Hood, and, I don't own any crypto. And the Roth did pretty good, $24, so, 0.6% this week? Not too bad. But, all right, guys, I'll make another video tomorrow breaking down exactly how my Google trades went and my SoFi trades went and the premium that I collected and how much of a percent that was and all that. But appreciate you guys for listening. If you made it this far, peace and love. Like and subscribe. Thank you so much. Peace.